Good morning, everybody. Hey, welcome to Wednesday, August 3rd. I hope that your week's going well and the rest of the week goes well. Yesterday, the Dow let us down with some pressure in the Dow stocks. They were the big loser yesterday, down over 1%. The rest of them didn't fare great, but didn't do that bad. We'll talk about that and more when Dave joins us in just a few seconds. Before we do that, though, remember that there's a lot of things in this world that you and I cannot control. But you know what? We can control how much risk you have in your portfolio. But you have to know what that is. You have to know what the number is. If you don't know what your risk number is, then you can't take action to fix it. Give us a call at 863-382-0037. to schedule your core retirement design phone consultation. With that, Dave's up next.
5.7 Light FM. How new? It is 8:40 now, 20 before 9. Time to check in and find out where your money's going this morning. What's happening to it? Is it growing or is it shrinking like yesterday? Head downtown to the offices of Statler Financial Services and get Phillip Statler's take on the matter. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well halfway through this first week of August. I can't say the markets have helped us much these first 2 days of August, but maybe, just maybe, looking at the futures, we'll get a little bounce today, and that would be helpful.
It sure would. I mean, first day of August was kind of a kiss in your sister day. It was basically everything was pink instead of red. But yesterday, the Dow was down 1.25%, down 402. Standard & Poor's was down by 27.5, and the Nasdaq fell by 20. What really concerned me was the fact that this time the blue chips are taking it on the chin instead of the growth stocks, which are pretty much already in the toilet to begin with, right?
Yeah, the Dow really did get hit yesterday. And remember, that's not capital weighted, it's price weighted. So if one of those stocks gets hit pretty hard, the Dow takes it on the chin. And I think that's probably what happened yesterday.
Yeah, I was hearing what we were talking about at the outset that Caterpillar had some bad guidance and they weren't expecting it. I don't think we had the report at the time, but Caterpillar was dragging the index down on the Dow, and yeah, that's the peril of the price-weighted numbers. I keep arguing with my friends that follow the Dow like hawks and saying, "Don't do that. Look at the S&P." Start the morning out with some news from yesterday, and you and I have talked about how it's a weird recession. By definition, it is a recession because we're down 2 quarters on the GDP, but the jobs have been holding up hot. Well, looks like we're leveling off a little according to the job opening report, huh?
Well, we are. They are starting to slide a little bit. Last month, there were 11.3 million job openings. We're down to 10.7 million. But let's remember, there's still only between 4 and 6 million people that are actually looking for jobs that are unemployed right now. So that's still, there's plenty of jobs out there, just not the kind of jobs I guess people want.
Evidently, yeah. I was going to say, when you told me 10.7 million, we've got fewer unemployed people than we have job openings. So a little leveling effect would be good, and it kind of adds credibility, or at least potential, for the notion of a soft landing without an employment market crash, which I'll consider good to begin with. First, in the morning data dump that we got out was out the Mortgage Bankers Association. They track mortgage applications week to week. Last week, they'd fallen by another 1.8%. This week, they actually upticked up by 1.15%. But we were talking before I went on the air. Let's not get too excited. They're still 62% down from last year at this time. So we did recover a little bit, but nowhere near enough to make up the deficit that we have from last year's pace.
Absolutely not. And as interest rates continue to climb, we're not going to catch up with what we've seen the last couple of years, just because interest rates were so low. And now they're to the point that they're, in some cases, almost double, if not a little over double what they were mortgage wise a year ago. So I anticipate we'll continue to see pressure on the mortgage applications, which is going to start to put some pressure on the real estate market, Dave.
And that'll put pressure on the job market, and we start having a little bit of a house of cards, and that's when we all say, I hope it's a very small house of cards, because a leveling off of the economy is exactly what the Federal Reserve wants to do with tighter money. We just want to do it without hurting people too bad.
Well, that's right. I mean, that's the idea. And I did see one of the Fed presidents, I can't remember which one right now, actually coming out, I think yesterday, and saying, look, he thinks that we're poised for a soft landing, which I hope he's right.
Yeah, we all do. I've been making fun of the Federal Reserve for eons as not being real good at reading economic conditions and responding in a timely fashion. But if he's right, well, I'll nominate him for financial sainthood. Other tidbits that are out this morning, AMD put out a little bit of an earnings warning, kind of seconded something that Intel said the other day, that PC sales are kind of going in the commode. Some of it, I think, is because we bought so many of them during the pandemic while we were working at home. I've always kind of had the pet theory that business sales for PCs, because right now the stock hot processors that are out there are so overpowered compared to what business needs that the cycle of replacement isn't as fast as it used to be either.
Well, that's true. I mean, they're not. I mean, I think I just had to replace mine. Mine was about 5 years old. So, it used to be about every 3 years you were having to recycle, computers, and now it is extending a little bit out. And so that's not helping the chip companies any at all, for sure. And you're right. Everybody, when they started having to work from home, upgraded what they need to upgrade so they'd have the speed and efficiency to work from home. And so that's putting some pressure on the current year.
And so far, nobody's gotten so excited about Windows 11. They feel an obligation to go out and buy a PC that'll take Windows 11. We're perfectly happy with 10. So I'm kind of seeing that. I'm seeing a redo of the time that everybody hold on to their old XP computers as long as they humanly could, because they actually understood that system.
Well, that's true. Yep.
Don't want to change, dagnabbit. Other tidbits out. Robinhood, our old friends from the meme stock business. Evidently, people aren't frittering out and buying and selling meme stocks anymore because they're cutting their employment base by 23%. That's a pretty good-sized layoff, I expect.
It is. And so let's just add that one more to, one more company that's getting a big layoff projection out there. And so that's going to, again, put pressure on the whole employment situation. And I think that we're going to continue to see more and more of these companies starting to lay off folks, which is going to then put us, I guess, maybe where the Fed wants us to be.
Yep, and I keep hearing that the layoffs seem to come very commonly in the white-collar jobs, too, which is kind of interesting. You made the mention that there's a lot of jobs out there, but they aren't necessarily the jobs people want. That might very well become the syndrome that we're talking about in 6 months. We're in earnings season. We got a pantload of reports out there today. Probably one of the leaders in the bunch is in healthcare. How did CVS do this past quarter?
Well, CVS did well. They beat on both their top and bottom line. And they raised their full year forecast. They say that they had strong sales in the over-the-counter COVID-19 test kits, and so that was a big deal for them. That helped them on profitability. They're trading up today about 4%. And then we look at another company that benefits from COVID-19, and that's Moderna. They made one of the vaccines. They had better than expected profits and revenue for the last quarter. They even announced a $3 billion share repurchase program. They maintain their full year sales outlook right now. And so benefiting them as well. They're up about 4.5% this morning.
Cool. I think Moderna made the announcement a while ago. They were tweaking their vaccine, too, to be able to address the new variant a little bit better as well. So that's got to help them down the line.
Absolutely. So we've got a slew of other things out there, just a couple of household names. Starbucks reported they had better than expected quarterly profits and revenue as well. Their global comparable same-store sales came in below what was forecasted. Again, that was primarily due to the weakness because of the lockdown in China market that affected Starbucks. But they're still trading up That's not putting pressure on them. Up about 1.8% this morning. I was trying to look and see a couple big winners, a couple big losers. We had Under Armour reported. They've struggled here and there, but they did have an okay quarter. They did cut their full year earnings forecast, but they did have and were able to increase their profit margins, which that's always a good thing. They did. They come in basically on as expected for their estimated earnings, slightly ahead of the estimate when it came to their gross revenue. They're up 2% this morning. Not an expensive stock either. It's down about $9.40 a share right now. The Dish Network. Well, let's look at this. Big loser. I want to give you the big loser for the day.
Let's hear it.
Match Group, the online dating service.
Ooh.
Yeah, they had, I guess, people are out and about in the bars now. They don't need as much online dating service because COVID's, lifted up its process. So we've got, they reported lower than expected quarterly results. Said their top line is going to be flat for this next quarter. And so they're not being liked very much this morning. They're trading down 20.5% this morning. It'll be a new 52-week low, actually, Dave.
Whoa, the pickup bars must really be doing well lately.
And I'll leave you with this one.
Ready.
Airbnb reported better than expected earnings. Revenue was basically in line. Travel demand really boomed this last quarter. However, they're down a little bit this morning because their current quarter guidance was lighter than expected bookings for this quarter. I think inflation's starting to raise its ugly head and affect travel a little bit. They're trading down this morning 6.8%.
That's an exception given the trend the travel stocks have been on too, so that's intriguing. Resetting the table, off day yesterday, not monstrous on the other two indexes, but Dow was off by over 1.25%. Looking at it 45 minutes before we start this morning, how we doing this morning so far?
Dave, we've got a lot of green ink out there coming off of a bounce, I guess, off of yesterday and Monday. The Dow's up 0.5 point. The S&P 500 is up 0.6%, and the NASDAQ 100 is up a little over 0.6% as well. On the commodity side, silver's giving back some. It's down about 0.2%. Gold's down a little over 0.1%. And then crude oil is heading up, I'd say substantially this morning, up 1.8% to $96.16 a barrel right now.
That's interesting because you got the instant quotes on it too, and my delayed quote has it less than that after the Saudis officially announced that they were going to increase their production. You and I both expected it to start heading down, didn't we?
Yeah, it's just not getting there.
No, that's kind of weird. Under 100, we'll take it, and we'll be satisfied with what we got. Overseas markets, the European markets, for the most part, are in green ink this morning in the range of about 0.33%. Mixed bag in the Asian rim, some up, some down, no trend indicated there. Trying to get a handle on my retirement plans is something that the amateur shouldn't do. It takes a professional pair of eyes to ferret out where the risk is and where my opportunities are, too. How do I find you to find those?
Dave, that's why we developed the core retirement design to help people design the retirement they always dreamed of. And give us a call at 863-382-0037 to schedule your core retirement design phone consultation. We'll make sure you're on the right track for that retirement. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here together again tomorrow morning. Again, I appreciate it, Phillip. We'll see you then.
All right, man. You have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, again, folks, I want to thank you for joining us today. Remember, we're here as a resource when you start thinking about retirement and what needs to happen in your process. Let us help you plan that out. Give us a call, 863-382-0037. With that, have a great day. I look forward to seeing you again tomorrow morning, same time, same place. Bye now.